Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're always glad when we can get back on this busy lady's calendar. Lynette Zang, the Chief Market Analyst at ITM Trading, is here with us again on Reluctant Preppers, and she's going to be spending this entire session fielding your viewers' questions that you submitted. Lynette, thank you for joining us again on Reluctant Preppers.
It's always a pleasure. I couldn't believe it's been as long as it's been.
That's what I have to give you a hard time about
surprising.
before we get started, because my Skype said it's been 3 months. That's unacceptable. And just to let you know, people have been submitting questions for weeks now because we thought we were going to get you on, and your schedule got uber tight recently. You had a big conference recently with a workshop on investment strategy. You can tell us about that at the end right before we sign off, but that's why it's been a while getting you on. But that means we've got ever so many more viewers' questions, and we'd like to plunge right on into those. But anyway, thank you back. You're extremely popular with our viewers, and we'd like to get to their questions right away.
I'm ready whenever you are.
All right. Show Me asks, does Lynette think that deposits in credit unions will serve as a better store of wealth than regular banks during the next financial system reset?
No, I do not. And the reason is because the commercial banks, the credit unions, and even the small regional banks are dependent on the commercial banks that are tied in to the central banks. So, I think we saw in 2008 who was considered too big to fail, and it wasn't the little guys or the individuals. So, no, I don't think it'll be better.
Zangetsu asks, what does Lynette think of the recent mergers in the gold mining industry, and why fundamentally it's happening, and what's the future of gold mining, and what does she think about holding gold mining stocks?
Well, as far as, I think that we've been for a long time actually witnessing a consolidation where the larger companies have so much cash that it's more efficient for them to gobble up the smaller companies. And that's pretty true, particularly in gold mining when you're looking at exploration, because I believe, and the evidence is saying that we've already hit peak gold. So, and as far as even discovery is concerned, and there's a finite amount. I don't personally own any gold mining stocks at this point because they are still a stock. So what I want to own is the underlying asset. But when you have a stock, now you have all of the issues of any normal corporation. And even though they've been lagging the rest of the market, when we're going into a reset and the markets all reset, those are going to too. So I would rather wait to own them, let the markets, let all that fiat money burn out, see what the governments are going to do around mine nationalization, which has been the biggest issue for metals and mining since the crisis hit in 2008. So we don't really know where that dust is going to settle yet, though what we do know is that governments have they may not call it confiscation, but if the miners are having to pay more parts of their company, their income, etc., there's all different ways that you can confiscate without using that term. I would rather see where that dust settles and then go in and strategically buy.
Okay. Just reminding everybody that we don't give personalized financial advice on this channel, but we do give thoughts for you to ponder. And I should have mentioned in the beginning that today
I could also say that what I can tell you is what I'm doing for myself.
Right.
Everybody's got to do what they're comfortable with.
Also, folks, should have said this in the beginning. It is Tuesday, February 19th, 2019. The next question is from Low Blood Pressure, who asks, Lynette, when are you going to start your own education company?
I think I already have.
Well, that was part of part of what this outreach is that you do on our channel and other channels. But you also, the event that you had this weekend was educational. We'll get back to
Yes.
that.
And
Right.
actually, there is something else about that, because I go in and I read in my grandson's kindergarten class, and they have this thing on money, pennies, dimes, quarters, nickels up on the wall. And I had said to the teacher, I could really do a good little thing on money and help kids understand it. So actually, I've got another big project that I'm coming to conclusion on, which I'm writing a book, so I got to get that done first. But I do think I'm actually going to set up an educational channel really geared toward kids, utilizing where my 5.5-year-old grandson is and my 4-year-old granddaughter is.
I don't know if you've heard my part of my story, where it was actually my son who started out. I remember him as a 4-year-old on my hip, when I was carrying him to take his older brother to kindergarten. And in the kindergarten classroom, they had the toy cash register with little fake money in there, and he was busily organizing their fake money all in order. And it wasn't much longer after that he was running his own curbside stands as an entrepreneur, selling various things, and it went up and up and up. And finally he started asking me about where money came from and why it had its value and who had the right to create it and who they had a right to give it to. And I assigned him as a project, as a good homeschool parent, to go do the research, and he came back and said it didn't make any sense. I said, sure, it must make sense. And so the further we checked into it together, the worse it got. And so that's what led me into this. So here I am. So,
that's awesome.
Next one, QQ asks, if there is a confiscation of gold in the U.S., will they be able to confiscate other countries' legal tender coins?
Well, if they're held here, then I'm thinking so. But people always say, if something happens. Well, they've been suppressing the real value of gold for a very long time to get people not to position into it. That is, in my opinion, a form of confiscation. Inflation guarantees that you can't buy the same amount of goods and services with the same amount of money in the future. That is a form of confiscation. So it never is really if they're going to do this. It's really more getting people to recognize that they already are doing this.
Good point.
So that they can see what they have in mind for us in the future. And if enough of us get that, like 3%, then they won't be able to pull that off. So, I'm sorry, because I need you to ask me that question again. I just heard, if they
No. I think that's actually a very insightful answer, we'll get to the second half of the question, but let's pause on the first part because that's really critical. We used to quite often interview like Andy Hoffman and some others, and when we talk about when is the collapse going to come, he says, you are seeing it it's in plain sight, it's in front of you, it's happening right now. And it used to be in slow motion, but now it's no longer in slow motion. Every quarter, the drumbeat of unprecedented local, national and global and local phenomena that you can point to and say, this is not normal, it's not natural, and it's unprecedented, is accelerating. So we're watching the collapse right now, and it's no longer in slow motion. And you're right, the confiscation has been going on for a century, and it's accelerating as well. But the second half of the question was, will confiscation of gold include if you're holding foreign country coins in your collection?
And I think it depends. If it is classified as a bullion coin, a monetary coin, so like a Canadian maple leaf, a new one, or something like that, I think that's all going to go in. Look at what you can hold inside of an IRA.
Good point.
And allow that to guide you as to what they are most likely to confiscate, like the old French francs or sovereigns or things like that. Those are classified as collectibles. You cannot hold them in the IRA. Kennedy had given them a similar status in the early 60s to the pre-33 coins because he wanted to import a lot. So for me, on the foreign gold, for the function of barterability, being able to pay my property taxes, medical expenses, those kinds of things, Those are the foreign gold coins that I personally hold. I don't have the new ones like the new Canadian maple leaf or, the pandas or any of the new coins I don't hold.
Interesting.
In gold.
I didn't think of that. I didn't think of that tie-in with the IRA rules, but that is thought-provoking because it's another government delineation that they've already expressed. They've already kind of revealed that.
Exactly.
Yeah. Donald J. Clausen asks, Lynette, would you describe a scenario in which the Fed loses control of interest rates and we return to 1980 levels? I assume he means precious metal prices at 1980 levels. Or maybe he means interest rates.
I think he might be referring to interest rates.
Yeah, that's true. That's true.
Right? Because what happened, interest rates they skyrocketed as the rest of the world lost confidence in the dollar, and we were in jeopardy of losing our status as the world reserve currency. So, do I think that we're going to lose control of interest rates or the Federal Reserve will lose control of interest rates again? I'll tell you, in all of my studies, when it looks like they've lost control of something, I'm not convinced, but that might just be a controlled demolition. Because all of these crises is really about wealth transfer. And we always assume that they want to keep this game going. But the game doesn't work anymore. They've used up all of their tools. So all the experiments that they started back in 2008, well, frankly, that's their toolbox. And it didn't work between 2008 and today. All it did was hyperinflate the fiat money assets, if you want to call them assets. It's hard for me to do that because they're really just garbage. But that's where all of the hyperinflation is in these markets. And they're teetering on imploding. So, I think that we're not in a good position, clearly. And we're already at the end, and anything could push us over.
For those who want to follow up, I think that's very insightful when you said the so-called crises are actually controlled demolition, in other words, intentionally planned and for the express purpose of massive wealth transfer. Folks, look up our Wayne Jett playlist, and he talks about not only the Great Depression in the U.S., but the 1980 collapse, the dot-com collapse, the 2008 collapse, about how each one of those was preceded by extreme maneuvers and positioning by the elite to profit hugely and to basically undermine the middle class in those areas.
Exactly. And you can see those repeatable patterns. And we're seeing a lot of them right now. So, these are just normal patterns that you see prior to every crisis and collapse. And the wealth might have transferred away from your hands, but it didn't evaporate into the ethosphere. It transferred into stronger hands. And this is the hands that, they intend this. They plan it. They position for it. 33, absolutely. 29, absolutely, was planned. Absolutely. And 80, that's when we were making the transition. 33 was the beginning of it. They used that crisis to justify taking the only weapon that the average citizen had to protect themselves and have some level of control over the government, the gold. They used that to take that away from the general population. And then in 71, they used that crisis to take that option away from other governments. So when people say, well, Nixon closed the gold window, and how bad does that sound? What they miss is that they used that crisis to hand full control over inflation to central banks, private central banks. And what's the result? It's not good. We have virtually no purchasing power left in our currency. It's only confidence that helps maintain that we even use the dollars, and we're willing to work for the dollars and attempt to save them.
Yeah.
But that's why, last month we saw both consumer confidence and small business confidence dip.
Right.
Now, is this the start of a trend? I mean, certainly with the lowest level of unemployment and presumably 3% year over year wage increases, which are still not keeping pace with real inflation, but people are out there spending, but not on retail sales.
Yep.
They want you to think that bad retail sales was a one-off event, because if you read all the headlines leading up to December, leading up to Christmas, it was going to be a banner year, and then it fell flat.
Yeah,
and they're treating it like it's one-off.
Just in the last week, we heard the Payless Shoe Source, which is one of the largest discount shoe stores. And normally, you'd think that discounters like Walmart or whoever would thrive during downturns or whatever, but they're closing all their U.S. stores. So that's just, again, that drumbeat just keeps going.
Exactly. And when they close those stores, you're going to have a lot of people that are out of work.
That's true, too.
So
and commercial real estate that's unoccupied.
Exactly.
Yeah. M's mom, 1994, asks, my mother, age 90, gets her pension through an annuity from an insurance company. Could she lose this source of income in the upcoming reset?
Yeah, because any annuity or any insurance contract or any contract, which is what all these fiat money products are only as good as the counterparty to that contract. And when you read those, and especially in annuities, it says it's based upon the claims paying ability of the company. So the answer is she certainly could, but let's assume for a moment that she doesn't. So she gets that same annuity check, but simply the check doesn't buy anything as the currency implodes and collapses. So it's the same thing with Social Security. They use it as a threat. They're going to change the entitlement issues. Maybe they won't. However, the dollars won't buy you anything. So
the other personal anecdote people have heard before, but I'll just drop it in this part of the discussion here as well, is that we, after the 2008 collapse, got out of stocks and into a money market equivalent fund. But so we thought this is nice and stable and it's going to give us these money market returns and 2-day access to our funds and all that sort of thing. But after the 2008 collapse, the Lehman Brothers didn't come back to life, and this reserve fund, it was called, couldn't. They had made bets on the backside. So whatever that insurance company is doing to guarantee that those annuity payments may be impacted, collaterally damaged by whatever this domino effect happens. So there's no way that most funds can claim complete, inoculation from those events.
No, because they're all fiat. And I recently discovered, we've talked about how the LIBOR all the IBORs are dying the end of 2021. And all of the central banks, 5 of them, are rushing to create new benchmarks. In this country, that's called the SOFR, S-O-F-R. And once they create that, then they have to create a market for it. And so Fannie Mae is really helping them out with that. And they have now issued the 3rd round of SOFR bonds. 80% of that issue is taken up or bought by money market funds. This is a pure experiment. They haven't finished creating that market. There's a slight market for it, but who's taking the risk? The banks only bought 1.3% of it. So what does that tell you? But because Fannie Mae has an implied backstop by the government, they're I don't even know how those bonds are rated. Probably AAA, because they're trying to create that market, but that's risk transfer to the public. Because when this whole thing implodes, what are you going to do? Go, I want my money back? Good luck with that. And that just came out. I mean, that is a recent thing that just happened as they're trying to develop this new market. But I think it's interesting that money market funds are the biggest buyers. Shocker. And then mutual funds, really, the banks only bought 1.3% of it. All the rest of it was purchased by those that manage other people's money. I don't have any money markets personally.
Right. So those are the people that are willing to assume risk, is those people that are investing other people's money.
Well, because what difference does it make? They're not the ones that are going to eat it on the chin when the whole thing explodes.
Yeah.
Right?
Yeah, right. That's right. And we've been on the receiving end of that.
Many times.
This is an interesting question about hyperinflation events that have affected different nations throughout history. Andrew McCullough asks, does Lynette think that the U.S. will go through a hyperinflation event? And if so, can she name a nation that held the world reserve currency that had a hyperinflation? And that's an interesting historical
First of all, we have actually gone through hyperinflation 3 times in our history. Revolutionary War, Civil War, and War of 1812. And typically, when governments go to war, historically, that's when they go off the gold standard so they can fund the war. Now, the only difference between hyperinflation and inflation is the speed of it. The end result is the same. So even though we haven't been inside of official hyperinflation, officially, there's less than 4 cents left out of the original purchasing power of the dollar. And I did a study once, and I looked at the time between wars, right? So when we went into hyperinflation, and there was on average, if I remember this correctly, something like 42 to 45 years between those wars, which was really enough time for people to forget and also to rebuild savings. Once we transitioned into, and also during that period of time, central banks had a limited charter, usually between 15 and 20 years. So there was only so long that they could abuse the currency before we would start fresh again. But when we went into this system, this is the first time that it was a perpetual central bank system. And as Ron Paul said, and I agree with him 100%, it is no coincidence that the era of perpetual war coincided with the era of perpetual central banks, because once they were installed, you could see the time between wars became shorter and shorter and shorter, so that by 1989, we entered a state of perpetual war. And we have been. Go ahead and look at it. We're the war on what happened in 2000 was a war on terrorism, and we're still fighting that war in this country. We're always at war. Yeah. And so we're always in that inflation, and look at how much more of the budget was given to the military. They got a raise.
Yeah, it makes me think about George Orwell's book 1984, where that was one of the principles of that dystopic future from the vantage point where he wrote it, that there would be this constant war being managed by the major powers. So
exactly, and that's where we are.
Here's an interesting one. It's a little bit isolated topic, but Stevehan 1000 says, when banks are fined for misconduct, who gets the money?
Well, mostly it goes into the Treasury, it goes to the SEC. It very little goes back to the consumers or those that were harmed. You know, so you can look even with Wells Fargo. So the money it goes back to the Treasury. That's why we saw that huge bounce or reduction in deficit spending. A lot of that was from all of those fines. But of course, then we have a new administration that came in that has a different attitude about that. So the fines have basically gone away and our deficits are plunging again. But yeah, the Treasury mostly benefits from that typically.
Pete Gerard asks, we've seen the Japanese zombie economy being propped up by the Japanese central bank coming on 30 years now since Japan's asset bubble price popped in the 1990s. And the JCB, the Fed, and the ECB doing the same globally since 2008. What's to stop these central banks continuing to do this, quote, slow burn on a global scale to keep the debt-based fiat system going for another decade or so, while all the incrementally putting in place a manageable soft reset rather than an unpredictable hard reset?
Well, I suppose anything could happen because these are things that are beyond my control. But the reason why Japan has been able to pull that off for so long is because everybody else agreed to it. The problem is the confidence. In Japan, the citizens, they ran out of safes. They're hoarding cash. They're hoarding their wealth. So I go back to what will prevent that is a loss of confidence. And the confidence in the governments, in the central banks, in the markets, in the banks have been waning. They've been declining. Now, people think that, although that's been declining too, you've got consumer confidence. Even though that's been declining, it's still up at really lofty levels. So I would say you need to pay attention to that. But the other thing would be a black swan event that really was unexpected. And I may have uncovered the possible event. I'm going to talk more about that on Thursday, so I don't really want to talk about it yet.
You can give us a hint.
Well, it has to do with unicorns and fantasies. And I'm not kidding, actually. Okay. I'm saying that quite seriously. But, it's been something that's been on my radar that I've been paying attention to. But actually, Jim Cramer brought it up about maybe a week or so ago. And I thought, okay, I've been gathering data on it because I wanted to do a piece on it. But when he brought it up, I thought, okay, time for me to dive in and wait until you see what I found. It blew my mind. I'm like, holy crap, because I had only skimmed the surface with the little bit of data that I had been collecting on it. But once I do a deep dive, it's amazing what you find. When you look at things a little differently, it's just amazing what you end up seeing.
Okay, so when you do publish that, it'll probably come out a day after this one. So send me the link, and we'll put it on the end screen. At the end screen of our videos, the last 20 seconds of our videos, we have videos that pop up that people can click on. We'll make sure they get to that one, so they can follow right on from this one into that one.
Okay, thank you.
Mike Marshall asks, he says, I follow Lynette on ITM YouTube, one smart lady. I cannot remember if she talks about or has addressed how Catherine Austin Fitts has discovered and confirmed by Dr. Mark Skidmore 21 trillion illegally created and gone missing from the federal government, going on talking about what is Lynette's opinion of this issue. This has, in my opinion, helped to also suppress gold and silver prices, biggest financial crime story of the century, second only to the Fed being created in 1913.
Well, I would agree with that. And if any of you happen to know Catherine Austin Fitts or have a little bit of influence, I would love to have a discussion with her, because she is definitely one very smart lady for sure. But it is not really a surprise, and it's actually really easy to do. And I think that once they can get all assets and all wealth digital, it's even easier to hide things and steal things, but that's the way the whole system is set up. And when you do enough of these deep dives, I absolutely believe whatever Catherine Austin Fitts is saying about the amount that's been stolen, it's probably even more than that. But I would absolutely believe that because it's easy to do. It's not real wealth. If you're going to steal a house, then that's going to take more effort than if you push a button and you just transfer money from one account to another that they create with another push of a button. And every time they do that, it robs you and I of what we work for. It's not just that money is over there and it has no impact. The more money they create, the less value the money that we're working for has. Mm-hmm. So even if you're working for a year and you didn't get a raise and you're making exactly the same amount nominally, you are actually working for a lot less. So yes, that's the way the system is designed, is as invisible as possible, a wealth transfer mechanism until there is simply nothing left to take. And As long as people maintain their confidence in this country, dollars, then they can keep this game going. But that, with a big enough shock, the black swan event is one way that central banks could easily lose control.
Okay. Here's a person who talks about they've been stacking, this is David Summit asks, he's been stacking silver very heavily and still buying some gold, but mostly silver. Believe we're running out of time before QE again, and looking for Lynette's thoughts on percentages of both gold and silver that one should purchase. But I know, again, this isn't personalized financial advice, but what principles do you that you think apply to that?
My personal, having been a student of currencies and currency life cycles since 1987, I am more about functionality than percentages. For me, silver is about barterability, so day-to-day stuff. So the amount of silver that I hold, which I hold for myself and I also hold for my children, because I want to take care of them through this period of time as well. It's based upon our cost of living. The gold is more about maintaining your wealth, but also being able to take advantage of growth opportunities. So I'm definitely more weighted, my personal portfolio is definitely more weighted to gold than to silver, because I can hold a lot more wealth in a much smaller package. If I'm going to buy, let's say I want to buy, a commercial building. Well, I might take a whole house full of silver, which is not convenient and not easily transferable, but it might take, one or two little slabbed coins, which is easy to put in my pocket and go anywhere. Mm-hmm. So for me, I find that silver is more affordable, so I'm not saying that you shouldn't have it, and I certainly definitely do own silver. But I don't do it as a percentage because I'm executing a strategy. I look at what are my goals, what am I trying to accomplish, what is the best tool to accomplish these different goals, and then that's how I build my portfolio. And everybody here, they've been trained in the strategy that's just based upon historical, not performance, but patterns that always happens. So, I'm definitely more weighted in gold. I don't look at it as a percentage because, let me tell you, even if silver might appear to be more undervalued than gold, what are you going to do? Convert it into fiat at that time? Mm-hmm. Heck no, you're not going to want to. But you might want to convert that silver into a loaf of bread or a tank of gas or something like that. The gold, I'm going to convert into a building or maybe a parking lot or maybe water rights or something like that. So I look at functionality. I do not look at percentages.
This is a related question, so I think you can dispense with this quite quickly. Mr. Lion 65 says, "Hi, Lynette. I know gold and silver protects my wealth, what little I have, but I just can't seem to wrap my mind around their value that you say they are worth compared to fiat money. For example, let's just say, for instance, that a gold eagle 1 ounce goes to $50,000. Wouldn't the price of whatever else go up as well?"
Well, the answer is yes, but that 50,000 would have no value in terms of converting it into a loaf of bread. I mean, what is it, something like 50 trillion in Zimbabwe dollars for 3 eggs? So we've been taught to put value in numbers, whereas the primary function of gold is to ensure that you are always appropriately paid for your work, no matter when you need to use that money. Because gold is a savings-based money. It takes labor and energy to pull it out of the ground. Mm-hmm. So it was a very fair way to value your labor against somebody else's labor. But the problem for governments is then if they want to tax it, about it, and you might not agree. So by going to fiat money, they get to tax you through inflation, and you don't even realize it. Mm-hmm. Now, understand, in fiat, this is how I come to the value. And honestly, I'm just doing it simply so that you can get it and anybody can check it. But keep in mind that in the current fiat system, money is created from debt. And many countries, including ours, no longer publish the amount of new money they're creating. But that's what you need to know. How much money is out there? Because with fiat money, it's an infinite amount. With gold money, it's a finite amount. So to make life easy, you can use the debt clock at The Economist. It only gives you one little part of the debt, but still. And I believe that it also tells you how many ounces of gold exist. But you can also go to the Department of the Interior, and they publish a report annually, and they know how much gold is in ground. Maybe they find a little that they didn't, but most of it is right there. So just to make it simple, you divide all the debt that exists as a proxy for how much money exists, because that's how money is created, by the amount of gold that exists, and that gets you to that number. Because when they do an official reset, they revalue that fiat money that has no intrinsic value, because it's only used in one place. So if confidence is gone, that's gone, against real money, good money, gold money, physical gold money, that is all intrinsic value, because it is used across every single aspect of the global economy. So there's always demand.
Well, Lynette, I think that's all the time that we have for this batch of questions. We'd love to get back with you because there's going to be more, I know, from our viewers in follow-up with this, but please do give me the link to that new story you've got that's coming out about a follow-up topic, and we'll get it linked into the end of this video. Folks, hang on there to the end here, and you'll get to the end screen that'll include that by Thursday, February 21st. So, Lynette,
Yep.
As always, thank you for joining us here on Reluctant Preppers and for enlightening our guests with your perspectives as Chief Market Analyst at ITM Trading.
It's always a pleasure, and we can't let that much time pass next time.
Sounds good. Thank you, Lynette.
You're very welcome. Thank you.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.